Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. And today we're diving into First Solar's latest filings. Get ready because it looks like they are selling future tax credits, a move that's both smart and a little bit unexpected. Before we get into the nitty-gritty, if you love getting these clear, nonsense breakdowns of what is happening in the corporate world, make sure you hit that subscribe button. And hey, we've got a growing community on Discord where we talk all things finance, so definitely check that out in the description below. So what is going on here? First Solar Incorporated, a company known for making solar panels, has made a pretty interesting deal. On the 20th of October 2025, they signed 2 agreements to transfer their future tax credits. Think of tax credits like coupons the government gives you for doing certain things. In this case, for making solar components in the United States. First Solar has generated a bunch of these coupons for making certain module parts and selling them in 2025. Instead of using these credits themselves later, they're selling them now for cash. This first deal is called the Fixed Transfer Agreement. Here, First Solar is selling a solid $600 million worth of these tax credits, all generated from their manufacturing done right here in the US. Now, it's not a dollar for dollar sale. For these $600 million in future tax credits, First Solar is getting $573 million in cash. This means they're selling these credits at a slight discount, which is pretty common. They're going to receive this money in 2 payments, one at the end of October 2025 and another just before the year ends in December. This is essentially like getting an advance on money they would have received later, and it's a smart way to boost their cash flow now. Then to raise the second deal, the Variable Transfer Agreement. This one is a bit more flexible. First Solar can sell up to an additional $175 million in tax credits through this agreement. The exact amount they'll sell under this one is still up in the air, and First Solar will decide that later. The price here is also set at a discount $0.955 for every dollar of tax credit. This payment is expected in February of 2026. So they've essentially secured a significant chunk of cash from these tax credits and have the flexibility to bring in even more. Of course, none of this happens automatically. Both deals have certain conditions that need to be met, like making sure everything is as it should be and that First Solar is not in any kind of trouble. These are standard clauses you'd find in these kinds of agreements, ensuring both sides are protected. So what does this all mean? First Solar is pulling in a lot of cash up front by selling future tax benefits. This is a really interesting financial strategy, especially for a company in the renewable energy sector, which often relies on various incentives and favorable government policies. It shows they are actively managing their financial resources and taking advantage of the current tax credit system. From a broader perspective, this move highlights the importance of Section 45X of the Internal Revenue Code, which essentially incentivizes domestic clean energy manufacturing. First Solar is a major player in this space, and by monetizing these credits early, they're strengthening their financial position, likely for future investments or to navigate any short-term financial needs. It is like they're getting paid now for work they'll complete and benefits they'll earn later. The fact that they're selling these credits to a leading digital payments company is also quite interesting and might suggest that company is looking for ways to offset its own tax liabilities or benefit from the growing green economy. Now, looking at the broader picture of First Solar Incorporated, they are a significant manufacturer of solar panels. Particularly in the US, they compete in a global market but have a strong domestic presence. This kind of deal is a testament to their ability to generate value not just from selling panels, but also from the incentives designed to boost renewable energy. It's a smart way to de-risk their financials and give them more flexibility. However, there are always risks. Relying heavily on tax credits means that changes in government policy could impact future earnings. Also, the discount at which they're selling these credits while providing immediate cash means they're not capturing the full potential value of those credits for themselves. The market for solar technology is also highly competitive and constantly evolving, so First Solar needs to keep innovating and producing cost, effectively to maintain its edge. In conclusion, First Solar is showing a shrewd financial approach by leveraging their tax credits. This move brings in immediate cash, which is always a positive sign for a company's financial health and operational flexibility. It's a strategic play that uses the current policy environment to their advantage. They appear to be in a strong position, but the long-term success will still depend on their ability to innovate, manage costs, and navigate the ever-changing landscape of renewable energy policy and competition. Alright, that is our breakdown of First Solar's latest filing. What is your take on these tax credit deals and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.